Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper, and tonight's webinar is going to be a review of the recent Forex trading patterns. I'm going to be reviewing last month's trading and what patterns were forming. Looking back in hindsight, could you have seen them if you knew what you're looking for? And can you use that then moving forward to profit from as you're moving forward with your trading? So that's tonight's webinar. Tomorrow evening, up live Forex market review. That will be at 8 p.m. Sydney time, same as tonight, but tomorrow, same time. Before we get into tonight's webinar, if you can read through the disclaimer, that would be great. Any questions to the chat box or the question and answer box? All right, so let's take the time to read through the disclaimer. So we're not going to be looking at the current market, we're going to be looking at last month's trading. Looking at market structure that was forming, any patterns that formed. Prices generally, it's not the same every month, but if over a couple of months, you're going to start to see the same kind of price patterns forming. And if you can start to see what happened in the past forming in the future, then hopefully you can take advantage of it. All right, so if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time Forex trader. I've been trading now for more than 15 years in the Forex market and mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. And through the week, you can connect with me at the website, acy.com, go to the Market News tab, or our YouTube channel, ACY Securities Australia, or if you want to connect with me personally, my Linktree page is there, or my social media links are in that page. So I'll just give you a minute if you want to jot anything down. And if you want to get access to my chart layouts and templates that I'm using in the webinars, then just bring up the next page. Just contact Nathan Bray. His email's there. I'll just put it in the chat for you. So any questions about the webinars or anything at ACY Securities, just contact Nathan. He will be able to sort you out. That's in the chat. All right, so let's get into tonight's review. All right. And all right, so what I do every month, not sure if we're doing this next month because I'm away for a week, so I might be skipping the first week in February, where I normally do this webinar in the first Wednesday of the new week in a month, to look back at the previous month. All right, so we're going to start with the Aussie yen. And I said this last month, you know, through the downtime or as you're heading into the new year, is make sure you got your key levels of support and resistance in, because that's where you're going to find all the patterns forming and the reversals and the trend changes. All right, so this dashed line is just representing where the new month started for December. And I'm just going to check my notes. All right, so we did have this decline down here into this low here, but I recall back in early December, I was looking at this area of support, 94.24. So these trades I'm going to show you all about support and resistance. So we had support down here. My dog's getting excited. And then we had a bounce back up here. So we actually got stuck between support and resistance for a while. So we had this level of support broken. It's also a weekly level. I think this was a level of reference too, but whether using this one or this one, it doesn't really make any difference. It's almost the same level, 96.03. So it's this 9600 level. And some trades were happening around these two levels of support and resistance. So start of the month, we broke below, came down to a clear level of support, and then we dropped down to the 4-hour chart to look at these levels. Now we actually spiked down below this level, but when you see on a 4-hour chart a massive rejection candle, and it comes up, you're often then going to see, and get my drawing tool in here, you're going to see then price come back down to retest support, and will the structure hold on the retest? Now, we never know whether the structure is going to hold or not, but often if you get a false break on the first attempt, the second attempt will come down to test and hold and then move back the opposite way. So just to show you, price actually came up and then came back down. So this is really where you wanted to look for your retest and hold. All right, so you really needed to have the mindset that if you have a massive false break on a 4-hour chart, a retest will probably hold and trade back up, and then we trade back up. Now, what occurs moving back up is the level of support that gets broken simply becomes new resistance. So this is the level from the day chart. Now, an entry point, I can quite clearly see an entry point here on the 4-hour chart. Last month, I'm pretty sure I went through the 4-hour entry method and the 100 pip entry method, or it was late November into early December. So I can see, if you've been following me, an entry technique here that I've been teaching, a 4-hour entry technique. We come back up to broken support becoming resistance here. And there's a 4-hour entry here. It's simply a break of a 4-hour candle from the level of resistance. So the break's just here. All right. And then break of that red candle, stop goes above the high. And then, of course, we start to move back down the range. All right. And then we move back up. So in the middle, I think this is the 8th and this is the 11th. Just re-support and resistance. We hold at support, we hold at broken support becomes new resistance. And these sorts of trades are happening all the time. You just have to have your support and resistance drawn in. Now, back to the weekly chart. We have this very strong sell-off down here, and through the course of the month, I had a fib drawn in from high to low, anticipating that a 79% retracement may occur from that move down. Now, the move did start back in November, bottomed early December. All right, so on the 19th, we come up to 79% level. Now, I've been teaching the 100 pip entry method, which is just coming up with a clear area that you want to be selling at. There was a level of daily resistance here, 97.57.8, which overlapped with the 79% level. So that was a clear area of resistance that you might expect price to come back to and hold. There's also this high point over here to the left. All right, so you could have actually traded there on first contact with a 100 pip stop. It only just pretty much holds there and then goes down, so it never gets anywhere near your stop. Or you could have traded it maybe on the 4-hour chart. As well here, we actually form a little double top. So there's an opportunity there to trade on first contact. There's another opportunity here just to trade here again. So 2 opportunities to trade and set a 100 pip stop for a move back down the range. And you could have been, we don't know how this is going to run out yet, but looking to trade here. And my target would be the 127 extension, copying, we're down, a rally, are we moving down here? So those entries there on the 19th here, this is the 27th here, just at the end of the month. Could have just traded at 79% level. So a 79% pattern. Or we could have gone down to the 4-hour chart and had a look as well. Now from a 4-hour entry technique, you could have entered break of the first 4-hour candle from the rejection, which would have been, there's an inside one here, so it's probably here. And you put your stop above the high. Price obviously moves down into some profit there, which you could have managed. And then we come all the way back up to retest. So there's another 4-hour entry here as well, if you didn't want to trade at the level. The break of that candlestick low. Stop above there. And of course, at the moment, you could be at break even, or you could have locked something in. and you're still wondering as to whether the price is going to continue down the track. But the major consideration here was the 79% level, the daily resistance level. And if you didn't trade here, when it came up and you started to see these wicks forming on these candles, these 4-hour candles, that was a sign that maybe we are holding for the second time here, and you need to look for whatever your setup is to get selling to the downside. All right, so that's what I wanted to review on the Aussie yen. So let's get into the Aussie dollar. And as I said before, if any questions, shout up. All right, now, I just want to go to the monthly chart and just set what has been happening on the Aussie. We've been having a rally within the monthly downtrends. So we were probably expecting maybe a month up this previous month, because we've been seeing this movement down through the year, rally, movement down into, I think, which was October, and then we've been retracing back up. Maybe it's going to form a double top. Maybe it's going to stall where it stalled to, you know, continue the trend on the monthly chart down. But we've been having a rally against the overall trends, against the monthly structure there. And the weekly trend actually turned up. But in the early part of the month, we did come up to a 62% level. And that could have been a level. So when we came up to here, in through here, that could have been a level, because it's a 62% retracement of the monthly range. That could have been a level where you may have expected maybe the market's going to top out and then turn down. So you may have anticipated that price. No, it's moved down. Is it rallying back up to 62 to then come this way? And of course it didn't, but it did offer in this area and the opportunity to maybe to look to get short in that area in anticipation of that move happening. And let's have a look at that on a lower time frame. So on the day chart, this is that area here. So this is the first day of the new month, and then we go up and do a reversal candle. So on the second day of the month, we get this reversal here. And we'd already held there two or three trading days. So in this area here on a 4-hour chart, you may have been looking for the opportunity to get short, be it that we're starting to hang around the 62% level. All right, so that was this area here. Now, the 62% level is the level that you want to see price action fail at. So if you start to see weakness here, so if we just look at the whole area, we actually hit it once and then twice. We start to reject in this area. So this was on the 8th. In fact, hang on a minute. Can't talk about this area because this was actually November. Other than just to show you that if we look using a 4-hour entry, this was actually at the end of November. 4-hour entry would have been the break of that candle. Stop above there. But this is the new month, December. We try to move above, and this 4-hour candle here closes back below the level. So at this point, this is the time to make a decision. Are we false breaking this high point? Are we going to fail at the 62% level? Do I want to commit to trading down? So a break of that candlestick low after closing below that level would have been a good entry. Putting a stop above here. Now, I would have been looking to target down here. However, price never gets down there. And actually weekly support holds the market in this area here. But in any event, if you were getting short here in anticipation this area was going to hold, you could have made some profit, but then there was a very good wake-up call here that this 4-hour rejection on support may have been the time to start to decide what you want to do with that short trade, because price starts to reverse back to the upside. Now, if we go back to the day chart and have a look at that area. We'll go to the weekly chart so we can see where weekly support was. We came down right back down to weekly support. I remember discussing this level in one of the webinars last month, 65.11. So we've moved above weekly resistance. Will it be support? And it became clear support in the middle of the month. So broken structure to the upside becomes support. And this must have been some form of news day, because you get a massive move up on that day, an outside candle to move off and up. Now, if you were watching in this area, maybe anticipating that this level of previous resistance, which was strong resistance previously. So when you have an area of previously strong resistance where it was holding, got a fraction short here, held one small through there. Let's call it 5 times. 5 times the area was tested, in fact 6 times here to be resistance. And then we break above, up through here. Is then you should anticipate then that there's a very strong possibility that this area will be strong support on a test. All right, now if you drop back down to the 4-hour chart and looking what did happen in that area. All right, so this is your major level of support. We get price comes down on the 4-hour and rejects. And then if you want to enter off the 4-hour chart as a 4-hour entry, then simply looking for a break of a 4-hour candle. The first break of a 4-hour candle happens here. Now I would put my stop below here, but you could, because there's a very mini higher bottom here, you could just put your stop just above, sorry, just below that low there. All right, I would go down here in case we actually came back down for another test. But this is just a very good example of clear break of weekly resistance becomes support. And if you just have these lines drawn in for the month, you're going to start to see price reacts to them. There was a very strong move up and off that level. Now, another way of trading from that level is just trading the 100 pip entry technique. You're expecting the level to hold. Stop goes 100 pips below, but it trades below the level. And it did trade up from the level 360 pips. So if you're risking 100 pips, risk reward of 1 to 3 up to where it's actually topped out at. All right, just trying to get rid of my lines here. Yep. All right, so we had a nice move up from weekly supports. Now back to the monthly chart. The monthly trend is still down, and come the end of the month, or very close to the end of the month, we're coming up to very high areas, or very high area within the range. So when we come up, the overall monthly trend is down. So when we're coming up to the very high area of the range, should expect maybe that the market will start to top out, because you're coming back up to the top of the range. So this top here is showing where the top is, and we get a clear rejection candle here. Just from a day chart perspective, you could have traded that by simply anticipating that maybe we're going to fail at top of the range here. And if we just draw in some more, there was some resistance here as well. All right, now you may have said to yourself, well, we're above this area at the moment. Well, if you're above that area and you don't want to sell until you're below, you can just wait for price to move below. But when I see a nice rejection, and all the pairs to the US dollar did the same thing this trading day, they all showed a reversal: pound dollar, euro dollar, New Zealand dollar. So a break of that candlestick low, stop above the high, the risk there is only 54 pips. If you want to use 100 pips, you could have used 100 pips and you could put your stop above all the tops. And then price would have to change trend to call you wrong. Or in any event, you could have just used a break of a candlestick rejection low and anticipating that we're at the top of the range. So if you're trading up here at the top of the range, and now we're into the new month, I'm not here to forecast what's going to happen for the new month, but I would start to anticipate that if we're staying at the top of the range, then potentially at least we'll go back down to maybe trade back down to the strong level of support here, where we got support last month, or the bottom of the range down here. All right. And I was actually trying to get short yesterday at 68.50 and missed by about 12 pips, which is annoying because it's still moving down today. All right, so we're not here to talk about what's going to happen this month, but levels to watch this month for clear support would be weekly support here at 65.11, and of course monthly support down here at 62.69, especially if we're failing at the top of the range. All right, let's move along to the Euro Yen. Now, Euro Yen maybe wasn't that easy, but I just want to talk about support and resistance and where we had a major weekly level support here. So like I was just showing on the Aussie dollar, when we hit a major level of weekly support, there was a major level of weekly support here, 154.426. What I want to try and get across to you guys and girls is when you're hitting a major level of support, so this is the start of the month here and we're coming down, we may well retest it a number of times, but if we start to see lots of rejection, lots of wicks, 2 candles here with wicks, when this first candle comes down and rejects, I would anticipate then we could get a retest of that level and then a move up. We actually retested it twice. So to the 4-hour chart, simply trading these 2 retests down here. You could just trade the 4-hour entry mechanism. We're looking for a break of a high. All right. Now, when we come back down for that second retest, break of a candlestick highs here. Stop below the low. Now, if you didn't do anything with this trade, comes back down to retest, doesn't take your stop out, and then moves up. Now, if you hadn't traded here, you could have traded a 4-hour entry on the break of this candlestick high. Stop below that low that's just retested. And again, price moves up. So the same entry method, seeing price hold at support, reverse back up, reverse back up. All right. So that was happening down on major weekly supports. You could have actually traded over here on the first contact once it started to reject. First 4-hour candle that got broken was here. You could have traded there if you really wanted to. Put your stop down there, which would have been rather large. Or you could have just waited for less risk to appear on the 4-hour chart. So we can actually come back down for another rejection here. 4-hour candle breaks the high just there. You could put your stop now below here, which is less. To see what the risk is. It's rather large. It's about 170 pips. So maybe I wouldn't take that, but I'm just showing an entry method. It's 170 pips. Over here, you've got a much lesser risk. It's about 100 pips because the market was very volatile at the time. So if the market's very volatile and you're seeing entry techniques to get in, you're either going to have to downscale your lot size or simply say to yourself, I don't want to trade with so large pips on my stop. and, you know, look maybe to a 50-minute chart to try and get in at very close to these levels, okay? But the point I'm trying to make here is when you're seeing price rejecting a major level of weekly support, then you need to anticipate that price is probably going to go the opposite way. Yes, the risk may be high. Well, I mean, the amount of pips that you're having to risk may be high. The risk is based on how much percentage of your account you're using. So, but it's just to prove the point that this is a key level of weekly support. Now, we may come back down this month to retest. Now, we've already held there 3 times on the 4-hour chart. So don't be surprised to see price action retest and hold. Okay. All right. Just want to go to the daily. And just want to discuss, we were getting held on weekly supports. And we had a very solid break below this level of support here. $157,689. So I just want to look at these areas where price came back up to retest this area. So here we hit weekly support. We broke through day support here. Broken day support becomes new resistance. Okay. It's just pure structure. Breaks, support breaks, becomes resistance. All right, so how can we get in? Well, it's a bit difficult here, maybe. But what we do get is price coming back up to retest here. So this is a false move above, we fall back below, and we hold here to trade down. Not the easiest area really to get in, but what does happen later in the month is we come back up for another test, try to move back above that level once more, puts in a clear rejection candle there, so that if this is difficult to get in, this is much more clearer. This shows you a 4-hour break of a rejection candle, testing this high. So your entry is really here. Stop above there. Or if you want to be really safe, you could put your stop above there. And price has been moving down since that rejection candle. Now, clear support's down here, so I don't know what is going to happen in the month. But 154.42 is the clear area to watch at the moment. All right, so leading on from last month where we held there once, twice, 3 times, would not surprise me to see that retested and hold in this kind of range-bound environment that we're seeing. Now, for those of you that might understand imbalances, we did have this imbalance form over here to the left. So just to add a little bit of context to what was happening in here, whilst this looks kind of difficult, there was this 4-hour move down, and there's this imbalance that started to fall down through here. So this movement back up here, see how he's top out at the top of the imbalance? This is why price has moved above the resistance level. It's come up to fill this imbalance here. So if you're understanding balances and the fact that they will often get filled, we come up to fill the imbalance in here. Once we fill the imbalance, we then show you a 4-hour rejection candle. So really adding an imbalance in here makes sense then to trade the break of the rejection candle, stop above the high. And in anticipation, this will probably maybe come back down the range. All right. So I saw that early in the day. Thought that was worth discussing as well. But really rather range bound for a lot of the month after we traded down to weekly support. Weekly support held 3 times. in this area of resistance was the day broken level of support became resistance for the market to then trade back down. So as we head into January, this is support 154.42, and this is resistance 147.69. Make note of those two levels because the market may well respect those levels again in the new month. All right. All right, euro dollar. And the new month was anything to the right of that line. So I've just been talking about imbalances. So one of the things I saw was we had an imbalance here. We actually didn't fill the whole imbalance, but the early part of December came down to try to fill this imbalance. And then it holds on day support. All right. Little giveaway is this little inside day here. So a very simple entry if we're going to trade from the day chart is we come down to day support and filling that imbalance, you get a little inside day. Just from a day chart perspective, your entries, the break of that candlestick high, stop below here. And in this case, risk would have been, if you want to trade from a day chart, so about 60 pips. Not that large. And we can have a look at that on if I can get my lines to remove. We can have a look at that on a 4-hour chart as well. So it comes down to an area of support. Doesn't give the best kind of 4-hour price action here, maybe to get an entry. What I always like to look for is, and it doesn't show, but it's always worth looking for, is if price comes down to a clear area of support that you're watching, I then look for price to come up and then come down and form a 79% retracement. Now, it doesn't quite do that. So that was certainly an area to look for, a 79% retracement on the 4-hour chart. Doesn't quite give it to you. And then price comes up. So it doesn't give you a best price action there to maybe execute a trade. Doesn't give you the opportunity for a 79% retracement. And sometimes that's where price will work. Could have taken an entry from the day chart perspective. So in trouble with my drawing tool. All right, so then we move up from that day level of support after filling the imbalance over here. And the 4-hour imbalance was actually just there. It pretty much came right back down to fill the whole imbalance before holding on day support there. Now, we trade back up. I want to go to the weekly chart. And we have this range here that we're trading up within. All right. And we come back up. So when we failed here, we're actually maybe failing at the 62% level in late November. Come back to today's support. Then we come all the way back up to this area here. And we don't quite get to the top. Which is 110.17. But I was starting to anticipate that maybe we're going to form a double top up here, because we're one small failing just above the 62% level. All right, I actually did get short up here and didn't make much profit, but didn't lose. And so we come up. So this is the 4-hour look. We're coming up. I think we had a news event in through here, maybe in the FOMC statement. I can't quite recall which one it was. But we come up just short of this top. Then we start to hold. And there's a nice 4-hour entry here. There's two ways you could have entered here. We come down, there's a little rejection candle here. Could have just entered the break of the candlestick low, stop above the high. Now it doesn't trade all the way down, but it does go into profit before, of course, moving further higher. So this is really a failed retest. It retests, holds for a while, and then continues up. Now in this area as well, I can see, but it's maybe not that obvious. There was, if you're looking at this area on a lower time frame, a very small 79% retracement. I just put my fib in here. I might just blow it up. Its price just comes down and then comes up to the 79% level just here. So you could have had a very limited risk. You're going to be looking at this whole area on the 15-minute chart and drawing your fib across the range you can see there on the 15-minute chart. And you have very limited risk to trade down. But in any event, if you just wanted to stay on the 4-hour chart, it gives you a clear rejection candle there. And you trade just a break of the candlestick low, stop above the high, and it trades down, at least into some profit. Doesn't come down all the way back down the range, but it moves up. Now, late December, when I was finishing up, I think it was the 23rd webinar, I did say to everybody, watch this monthly high over here. Here's the monthly chart, this high up here. It's 110.95. All right, so it came up, put in the lovely weekly rejection last week. All right. So that would have been an area really to watch for a failure. 79% level, monthly high over here. Now, if you wanted to trade the 100 pip price entry that I was discussing last month, you could have just simply been trading here. Stop goes 100 pips above. So trading here where the stop 100 pips above is stops around about where I've got my crosshairs. Price never gets there. Currently, you're up 156 pips if you want to trade that way. So hopefully by, me showing you that method last month and seeing how you could be using it is you're just trading at a very known level of strong possible resistance. Okay. And you're already up 150 pips. And long term, we could be seeing, depending on how the structure starts to evolve, we've had a large sell-off, going to move up to 79% level. Are we seeing a long-term decline? And you could have been getting in at the top of the phase there, or the turnaround, using a 100 pip entry. So the risk was 100 pips. We don't know what the reward will be at the moment, but if that maps out, it's about 1 to 8.5. Now, I don't know if the 4-hour chart actually presented with an opportunity to get in, because it did sell off quite aggressively from the area. And I was actually watching this rejection candle up here. I had a fib drawn from this high, and I was dragging it down, looking for some form of 79% retracement. I'll have to drop it down to 1-hour chart just to see where it went. Yeah, I thought it was that low. I was waiting to see if this was going to come up and present with a move up to there to coincide with this area of resistance here. Didn't get there, so I was anticipating it was going to reverse, and then I was looking for it to come back up, but never gave me the opportunity. So sometimes you can have different entry techniques that you may be looking to trade. If you use a 100 pip entry technique there, you would have gotten in. If you're looking for price to come down and then rally back up for, say, a 79% retracement, it doesn't offer it. All right, and the market wants to offer you what it wants to offer you in terms of a pattern at times, and it doesn't offer you a 79% retracement. So if you're waiting for that, then you can't get in. And you just have to live with it and wait for the next opportunity. All right, so if you did use the 100 pip entry method up here, that was the way to go, but there was a clear monthly, this is my weekly chart, but this is a monthly high over here. In fact, we go to the monthly chart, we could be dealing with a left shoulder, head, right shoulder forming here on the euro dollar. We've moved up from a lower bottom from these two minor lows here, 1 and 2. All right, so it was a great level to watch. And it doesn't matter if you didn't get in. The thing to understand is, as we're heading into the new month, is if this is going to be a major left shoulder, head, right shoulder, over the course of the month, we should start to see this unfold to the downside, continuing. So at the moment, you know, I would start to watch for the potential for this to come up. Maybe come up for a 79% retracement and then go down. So it's well worth watching at the moment, even though if you haven't gotten in the top there at the moment, you know, look for if it can come around another retest, 79% retracement to go down. We'll have to wait and see if price can get back up there. But if you know price gets back up there this month, then you really want to be watching that level. All right. All right, so that's a review of the euro dollar. How are we going for time? I'm just going to maybe time to go through the pound dollar. That's the start of the month. And at the start of the month, I was lucky out here to go short because like on the euro dollar, I was seeing that we had this decline. This is the weekly chart. This range moved down here. And we were maybe starting to hold at 62% retracement. And I was anticipating that maybe we've moved down. All this price action coming up is corrective to the 62 before moving down. Now, we have traded through a little bit of that area. You know, now we may be topping out to go down still that way, but we'll have to wait and see. But in the early phase of December, early start of December, I was looking in this area for failure. All right, so on the day chart, that's where the new month started. And then the next day, you know, we're back up to where we've been holding. We had all these highs here, lots of resistance here. See all these highs formed before the collapse. So then I look at this whole area as possible strong resistance, and we were not able to get into that area at the time. Starting to want to hold at the 62% level. So if you move it to the 4-hour chart and look at price action here, price has been moving up. All right, and I'm looking in this area here for an entry. Price comes down and comes back up. Now, depending on how aggressive you want to be, you could have a fib drawn across that range for a 79% retracement. Looking for price to come back up to, so once here, twice we failed at 62% level to trade down, is if we come back up to the same 62 level, we may well hold there once more. So you could draw a fib across this range to monitor the rally. And there's the 79% level. And you could be trading at the 79% level, stop above the high for one. So you could trade at the 79% level, which is there, stop above that high. You could have waited to see if the 4-hour chart is going to reject and reverse. It starts to reject on that candle, so the entry is a break of that candlestick low just here. Stop above that high. And we see price moves down. I know it doesn't move down all month because it gets some form of support. before then, wanting to go back up. But I was looking to trade in here last month at the 62 area, thinking the 62 area was going to be holding for a long-term move down. All right, so let's just drop back to the day chart. Right, so all these highs over here to the left, you can see we traded into those highs, and ultimately we have failed through the course of December. All right, now, what day was it? All right, it was actually the 19th I was looking at. So we've got all these highs to the left. We come up here and then we sell off. So I was actually once more looking to sell up here. Look at this area on the 4-hour chart. So we fall down. So I'm looking at, we've come up. We moved back below the 62 of the major range. So now I was looking then at 79% retracement to put in a lower top up here to then trade down. Now we do trade down so you can get the risk out. So you could have been entering at the 79% level. Stop above. And we may have been anticipating a long-term move down, but of course that doesn't come. It wants to have another go up there before, failing once more. Now, you can quite clearly see here today, this area of support that formed last month is offering some support right now. So 126.25 approximate area is maybe offering support for maybe another move back up. Have another go at the 27.98, the 2800 area up here. We'll have to wait and see what happens in the new month. All right, well, don't be surprised to see another test up here. If we get another test up here, this is quite clearly, again, an area to watch for further failure. All right. So some of these trades are looking at, a topping out phase here, maybe on the pound that you could have been trading. Ultimately, the downside never presented from the 62% retracement area through the month. It kept selling off down, but then price kept moving back up and above. So a little bit difficult, but if you were trading the failure then the rally, in any of those examples there, you wouldn't have lost any money. So it's always good to look for a level of resistance. So if you've got a level of resistance, just as we finish up, is if price comes up and hits it, allow the market to move down, and then look for a 79% retracement retest to trade down. So there was one here. There was two here. And whilst we didn't get a major long-term move down, there is risk reward in these trades of at least 1 to 3 on both of those trades. So if you're risking, say, 2% per trade, if there's 6% gain there on those trades where you may be trying to trade for a further long-term move down, but price wasn't wanting to break down. But two retests and failures offering 279% retracements there on pound dollar. So this may offer the same similar kind of scenario in the new year. We'll have to wait and see. Of course, price action at the moment. I'll just finish up. We've of course moved down. We may keep moving down, but what I would start to watch for here is a rally. Can we get a 79% retracement for a move down? All right, and obviously be discussing that through the course of the month in my analysis. So that's a review of some of the patterns that were forming last month. Lots of trades coming up around getting your support and resistance correct, seeing where price is respecting support and resistance. Some of the trades were, a level of support or resistance breaks and changes polarity, and price comes back up to the same level and then holds for then the next move. Or any questions? I haven't got any coming in, but what I would encourage you all to do is, review at least once a month the market, how it unfolded. Can you see what happened last month? Can you start to see certain patterns unfolding all the time? And if you can start to see it in hindsight, maybe you can start to see it as your foresight as you start to move your trading forward. All right. A number of pairs at the moment, I'm watching for the potential of a, move to the 4-hour chart here on the Aussie dollar. We may get a rally at some point of this decline. And I'm going to be looking for, can it come up to a 79% retracement? Same on the euro dollar. Don't know if the euro dollar can get up to a 79% retracement here. Seems to have had a very strong sell-off, but you never know. We do have the FOMC statement coming out, I believe. So FOMC meeting minutes tomorrow morning. We've got the US job figures coming out on Friday. So we may see a rally on maybe some good news coming out. I beg your pardon. We may see a rally on some poor news coming out for the US because this is a pair to the US dollar. So we'll need to see some poor US dollar news for this to go up, because at the moment the US dollar is getting stronger. But looking for some form of rally on these pairs as we may be topping out. All right. Right, so I've got more analysis tomorrow. So that was a review tonight. More analysis tomorrow. If you head over to the webinar page, I'll be on board again tomorrow at 8 p.m. It's this one here, 4th of January, 8 p.m. for live Forex market review. If you have time, I look forward to seeing you then. If it's the first time I've talked to you this year, Happy New Year. I did wish everybody Happy New Year yesterday, but we're still at the beginning of the new year. So everybody wish you all a great new year. Hopefully it's going to be a very good trading year for you all. And in any event, hopefully it's a healthy and safe year for you all. And with that note, I look forward to seeing you next time. Thanks, everybody.